have bills that the mortgage costs the same, but only one person's paying it, right? So what the mortgage protection policy does is it actually pays off, well, usually, depending on the client, depending on their situation, what you want to try to do is get them enough death benefit to be able to pay off the full mortgage if they get hurt, they get sick, they get injured, or they pass away, right? And so that's what a mortgage protection policy does. Now, a lot of times in that situation, you can get them two policies, one on the husband, one on the wife, and each other will be the beneficiary. Okay. So that's why it's important to know. Have you ever bought a house before? No? Okay. So on a mortgage protection policy, you want to know what the mortgage is, right? So when they buy a house, the house is going to be worth more than what the bank is going to give them for a loan. So let's say the house is worth $400,000 and they just bought the house. They're probably going to get a loan for $385,000, $390,000, maybe $395,000. If they're a veteran, they can get, with a VA loan, they can get 100% of the value of the house, so $400,000, right? So you want to have the death benefit meet the actual mortgage. So if it's a $385,000 loan on the house, you want to get the death benefit to be $385,000. Now, if their policy, if their payment is too much money for them, remember, you're going to find that out in the financial inventory. If it's too much money for them, then what you can do is say, look, something is better than nothing. Let's get you half the mortgage paid off if something like that were to happen. So that way you're at least halfway protected. And the reality of it is something like that happens, they'll get a large death benefit and they can use that money for whatever they need to. They can make mortgage payments on it for the next 2 years and then sell the house.
Okay.
Right? So you have options.
Yeah.
Right? Does that make sense?
Yes. So wouldn't that also, like, the inventory, wouldn't that work on final expense too, because we're trying to see what their budget is?
Yes, absolutely. You want to go through the financial inventory no matter what lead it is.
Okay.
Right? So essentially what you're going to do, the call works like this. You give them a call.
Oh, wait, sorry, give me a second. I'm parked in front of the mailbox, so I gotta move.
Oh, okay. How are you, Jeff?
Okay, thanks. How are you?
I'm doing fantastic. Do you have a good Easter?
I did. It was quiet.
It's quiet. It's always good.
Yeah.
Yeah, I did too. It's quiet over at my house. We just, grilled out smoked some ribs and had some friends over and just sat there and ate some ribs.
Oh man, that sounds good.
Yeah. So let's do a role play here. Jeff, do you want to be my client? Since
Yeah,
Faye is
I'll
a
be
little
your
bit
client.
New. Okay.
Yeah.
All right.
I'll be a tough client, so how's that?
Okay. I love it. Faye, pull up the financial inventory sheet. It should look like this. Can you see me, Faye?
Yes.
It
I
should
gotta
look
print
like
it out.
this. And then just kind of follow along as I go through this through a role play with Jeff here, okay? Because I'm going to ask questions on the financial inventory sheet, but it's not going to be in order, and it doesn't have to be in order. As long as you get the information needed, that's the most important part is getting the information needed, right?
Yeah.
So, okay. Jeff, you ready?
I'm ready.
Okay. So I already set the appointment for you. And Jeff, let's pretend this is a mortgage protection appointment, just so you're kind of clear. All right.
Okay.
Um, so yeah. Hey, Jeff.
Hi.
Hi. Yeah, this is Sean, just giving you a call for our scheduled appointment here. Um, it looks like I got you on the schedule here to go over some mortgage protection options with you, right?
Right.
Just to verify your information here, what was your date of birth?
January 6th, 19, let's see, how old do I want to be here? Let's say 1990.
1990. Okay.
Yeah.
So you're a youngin today. And then what's your height and weight?
I am 5'10", 205.
5'10", 205. And then have you used any tobacco products in the last few years?
No.
Okay. Now, are you married, single, divorced, widowed?
Married.
Married. And then what's your wife's name?
Nancy.
Okay. And then are you looking into a mortgage protection plan for Nancy, for you, or for both of you?
Primarily for me.
Primarily for you. Okay. And then what is your how long have you been looking into getting a mortgage protection policy?
On and off for about 6 months.
6 months.
Yeah.
Okay. So you've been looking into it for about 6 months. Why haven't you gotten anything in the last 6 months?
Well, because I I've been reading a lot of different things about different plans, and I really just had never decided on it. And I've got some insurance right now, so I wasn't too worried about not having enough insurance necessarily. But it is important now, so it's important.
Okay. So you have insurance now,
Mm-hmm.
and you've been looking into it for the last 6 months. So that
Mm-hmm.
kind of tells me that it has been important to you for the last 6 months. But
Oh yeah.
you said that it's important. It's important now. Why is it important now and not before?
Well, I guess it's just a matter of timing. I just I have insurance in force, and I said, well, we probably need some additional coverage, and talked to my wife a few times, and she said, yeah, we do need some additional coverage. So now it's important because we had the talk.
The talk. You mentioned the talk. What do you mean by
Yeah.
the talk?
Well, we had just a, we just got a little bit more serious with our finances, and we just came to the realization that we need more, and so we just decided to go ahead and look around.
I see. And you've been looking for 6 months?
Yeah, 6 months, and I've been reading a lot about different programs and what might be appropriate for me. So,
Okay. And what have you found out so far?
well, of course, term insurance is pretty inexpensive, and then there's the other cash building programs. I would, and I've went online and did some quotes on whole life, and that seems to be pretty pricey. So, yeah, the universal life could be
Okay.
an option, but term seems to be primarily my primary interest, I think.
Okay. And you mentioned that you have insurance in place already. What do you
Hmm.
have?
Well, I've got some at work, about I think 100,000 at work, and I've got a term insurance policy I bought a few years ago.
Sorry, Jeff, can you say that again?
Yeah, a term insurance policy I bought a few years ago for 250,000.
2 years ago for 250,000.
Well, yeah, the face amount's 250,000. Yes, 250,000. I think it's a 20-year term insurance. I think.
Okay. And then how long ago did you get that 20-year term?
A couple years ago.
Okay. So you have a couple years left on it?
No. I have like 18 years left
You have
on
a
it.
couple years. You bought it. Yeah, 18
2
years. So
years.
you bought it a couple years ago. That's what I meant to say.
Yeah.
And then what carrier is that with?
Uh, I don't know if it's Protective or Prudential, one of those P companies.
A P company. Okay.
Yeah.
P company. Okay. And so how much is your mortgage on your house?
Yeah, the mortgage is 250,000.
250,000. Okay. And then do you know the
Oh.
value of your home, Jeff?
It is about 480,000.
480,000. Okay.
Yeah.
Now, when did you just refinance the home or is that a new purchase?
That was a refinance.
And you just refinanced it how many years ago?
A couple years ago. Yeah.
Okay. So, did you get mortgage protection information in the mail a couple years ago?
Yeah, I got a mailer, and then I saw some things online, and so uh, I saw that it was inexpensive, so I signed up for it online. I got approved, and
Okay.
yeah,
By the way, how much is your mortgage payment, Jeff?
my mortgage payment is $1,800 a month.
1,800. Okay. So you got a mortgage 2 years ago, and then you got some information in the mail, and you didn't fill out the form, you didn't send in any request until about 6 months ago, and
Oh,
then you've spoke to a couple of people, I'm assuming, tell me if I'm
hmm.
wrong, but you still have not gotten any insurance yet. Is that accurate?
That is accurate.
Okay. Now, what was it that the other insurance carriers provided to you that you felt like you didn't want to pull the trigger and get a um, life insurance policy to protect your mortgage yet?
Yeah, some of the rates were seemed to be high compared to a lot of the things that I saw on the internet, and so I just said, it didn't seem like they were working in my best behalf. So I decided not to pursue it farther with those guys.
They were not working on your best behalf. Who is they?
Right. These two brokers that called me up
Okay. Now, why do you think that they weren't working on your best behalf?
because I checked with some other companies online just through a web search, and I noticed that the quotes that they were giving me seemed to be high. So I think they were just working with one or maybe two companies. So I wasn't too impressed with that.
Okay. So, do you think that they weren't working on your behalf because the quotes were high, or was it that those brokers um, weren't providing you with what you or listening to you, to provide you what you need for mortgage protection?
Kind of a combination of both. They seem to be limited in what they had to offer me, and
Okay.
yeah, that's the gist of it.
And so because of that, you decided I'm going to just search around for a little bit more to see if somebody else has more options for you in life insurance for mortgage
Options would
protection to protect your
sure,
mortgage.
sure, yeah.
Okay. Okay. So you're looking for more options.
Mm-hmm.
Now, let me ask you this. You have a $250,000 term policy that will pay off your mortgage.
Mm-hmm.
Why do you want mortgage protection insurance? Why are we on the call today?
Now, I want to cover. Well, I can use that to cover the mortgage if I need to. But since I refinanced, I've got
Mm-hmm.
28 years left on my mortgage now, and I've got 2 kids that will be going into college here shortly. And if something happened to me, I want to make sure there's enough money for them and to pay off the mortgage.
Okay. So you have a term policy that will pay off the mortgage.
Mm-hmm.
So correct me if I'm wrong, but it seems like the real issue is that you want to be able to pay off the mortgage and replace some of the income that's lost if you were to exit stage left from this earth. Is that accurate?
That is accurate.
Okay. Now, how much income, what do you do for a living?
I am a physician's assistant.
Physician's assistant. Okay. And then how long have you been doing that for?
Oh, about 20 years.
20 years. Okay. And then what is
Mm-hmm.
your monthly income net, like take home?
Net.
Super easy to figure out.
Let me think here. Probably 7,000 a month.
7,000 a month. Now, you mentioned that you're married. Does your wife work?
No,
Okay. So you're the main breadwinner in the family.
I am.
Okay. Now, monthly expenses. I know your mortgage is $1,800 a month, but if you were to add up your car payment, gasoline for the car, insurances for the car, health insurance, that kind of thing,
Mm-hmm.
utilities, food, Netflix,
Mm-hmm.
credit card
Mm-hmm.
payments, date
Yeah.
night with the bride. What
Nice.
would be your total monthly expenses every single month if you were to add all of those up? And you can just ballpark it. You don't have to be exact.
Yeah. Maybe 5,000, 5,500, and I'm just kind of wondering why are we taking a deep dive into my finances? I just want to buy some insurance.
Great question. Well, it's my job. I don't want to assume anything, right? And I want to
Right.
be able to help you. And I want
Mm-hmm.
to be able to put you into a policy that you can afford, something that I would feel bad if I put you into a policy that you can't afford. Then you have to
Mm-hmm.
make that decision. Do I put food on the table for my family or do I pay my life insurance policy? So that's kind
Right.
of why I'm asking those types of things.
Okay.
Okay. Does that
Okay.
make sense?
That makes sense.
No. No. Why now? I mean, why all of a sudden you're ready to get something right now, Jeff?
Well, again, we had a serious talk about our finances and our future and the kids, and we decided that it would be a good time to look right now. I mean, not to look, but to
Okay.
seriously investigate it right now. It's pretty simple. So,
Okay. So what happens if you don't get any life insurance? What happens if another
well,
year goes by and you don't have insurance and something happens to you? what then would happen?
Yeah. Yeah. Well, the kids probably couldn't go to college. My wife would have to go back to work, probably have to sell the house or move in with my in-laws. She would maybe have to do that, at least for a while. We do have equity in the house, but how long is that going to last if she sold the house?
Yeah. Okay. So if she sold the house and had to move, would that be a big deal?
Oh yeah, I mean, we would be uprooted from the community. Number one, number two, she wouldn't have the income, even with a big down payment, to afford a decent house nowadays. Those are too expensive.
Okay. So you're worried about her having to pay a different mortgage on her own dime, and it would probably be
Mm,
too expensive for her.
sure,
What would happen? What would your kids do if they can't go to college?
good question. Maybe community college, which is not necessarily bad. It's our plan was for the kids to go to college and us to help them out as much as we can.
That's the plan. Um, but my question is why, if you don't get them insurance and they're not protected, and they can't go to college, what would they do? What's worst case scenario?
Uh, maybe they would not have. They'd have to go find some other kind of training, so they could provide value and earn some money. I don't know what job positions they would
Would they
be in.
have any? Okay.
Hmm?
Would that be pretty devastating?
You want to do the best for your kids, so you want to make sure that they at least have the opportunity to, you know, pursue careers if they want to. If they don't want to pursue a professional career, I mean, they can, you know, find something else to do, but at least give them that option.
Okay. How many kids do you have?
Two.
And are they both going to college?
That's the plan. They're in junior high school right now.
Okay. Now, how much are you allocating for college education for both of them?
Yeah, well, we've been for a number of years we've been putting away uh, about $1,000 a month.
Into a savings account?
Yeah, savings and a mutual fund. We have a mutual fund as well.
Okay. What happens if you're putting money into there and then the market tanks?
Well, we have it in pretty conservative investments, so that we don't not too worried about that. But if the market
Not too worried about
had an extended downturn, then that could be problematic depending upon when we start withdrawing money.
that. I see. Okay. Now, what happens if you pass away? Does Nancy get any of that money?
Well, she probably would have to use some of it to live on. If she didn't sell the house, she'd have to make the mortgage payment and food payments and gas and all the rest.
How much money do you think she would be left with after taxes?
If she sold the house,
No, I mean from your funds.
oh, since then that's after taxes, probably right now probably just $25,000.
Oh, that's it? Okay. Do
Yeah,
you think
yeah.
that's enough for her to get by on or
Nope,
to do anything with?
nope.
Okay. Okay. So what I'm hearing from you is that if you don't have any insurance to replace your income and the worst case scenario happens, your kids don't go to college, your wife has to get up and sell the house and move out of the house. And that might be pretty devastating to your family if something like that were to happen, because they won't get a college degree, possibly not, or they might have to go to a smaller college that's cheaper, and your wife may have to live in a house that she may be struggling to make that payment. Is that kind of what I'm understanding from you?
That's probably what would happen. Yes.
Okay. So as you know, I'm a broker. I have access to about 30 plus A-rated carriers nationwide. So what that
Mm-hmm.
allows me to do is shop around for you, customize something
Mm.
that best fits your situation and your needs, and most importantly, fits your budget. Okay. And so if I, now obviously these policies are pretty hard to qualify for because they're based off of your age and your health, right? And I haven't
Mm-hmm.
asked you any health questions, but
Mm-hmm.
if I were to find a policy for you that would help you protect your family, protect you if you get hurt, sick, injured, while you're still alive,
Mm-hmm.
and then provide income to your wife if you were to pass away and actually replace your income for a certain amount of time.
Mm-hmm.
Do you think that would help your family and benefit you?
Sure.
Okay. Knowing that this will help your family, how soon are you wanting to get this policy in place if I
I'd
were to
like
find
to,
something for you?
within probably the next 30 days.
Okay. So my schedule fills up very, very quickly. As you know, it took a while to get on
Mm-hmm.
my schedule.
Mm-hmm.
So you have me on the call today. If we were to submit a request today with the carrier,
Mm-hmm.
are you wanting to get protected right away? If we can put something in place that is affordable for you, protects your family, and fits in your budget.
Let me think. Uh, do I have to give you any money?
Well, you have to pay for it, but you
I
don't have to pay
understand.
for it until you're approved.
Okay, that sounds good.
But okay. So but before we do that, again, I need to know more information and I need you to be completely honest with me. What prescription medications are you currently taking?
I take cholesterol medication. I forget the name of it.
Okay. Atorvastatin?
Yeah, that's it. Exactly.
That's it? Okay. What other
I
medications
t-
have you currently been taking?
Oh, I'll take for hay fever. I take
So allergy
some
meds?
allergy meds. Yep.
Okay. Do you live in a barn?
Uh, no, no, but we live out in the country,
I'm just
so we
curious
get.
why you'd be allergic to hay. Oh, you live out in the
Uh,
country. Okay.
uh, uh, uh.
I'm just teasing. So what let me go through these medical conditions here and see if any of these apply to you. Let me know. Have you ever had a heart
Okay.
attack, stroke, mini stroke, cancer, or any stents put in?
No.
Any diabetes, neuropathy, high blood pressure, lupus, rheumatoid arthritis,
Nope.
asthma, COPD, any thyroid issues, anxiety, depression, or maybe even kidney or liver disease?
No.
Okay. Any hospitalizations or surgeries in the last 5 years?
Yeah, I went in. I went in the emergency room about 3 years ago. I broke my arm skiing.
Okay. Broken arm, that's
Yeah,
it?
yeah, that's it.
Okay. And then any moving violations in the last 5 years? Speeding tickets,
Yeah,
DUIs?
I had a speeding ticket a year and a half ago.
Okay, just one?
Yep, just one.
Okay. Any felonies or misdemeanors in the last 10 years?
No.
Okay. So what I'm going to do here is we're going to submit a request to the carrier, and this will probably take just a few minutes here and see if we can even get you approved, because we can't even get you approved until we submit a request. And the reason why we need to do this is because the carriers actually need to think about you.
Mm,
Your income is $7,000 a month, right? And
mm-hmm.
so how much are you wanting to replace? 5 years of it, 10 years of it? If you were wanting
Mm,
to replace 10 years of income, that would be 800, a policy of 840,000. If we were to replace 5 years of income, that would be 420,000.
right. Huh. So I'm making $7,000 a month times 12 is 94. Huh. Okay. Well, at least 5 years. At least, well, kids are in junior high. Probably 10 years. 10 years of income.
So probably 10 years, about 840,000.
Right. Right.
Okay. Okay. So I'm going to recommend a company called NLG. Okay.
Mm-hmm.
Now, from here, what I would do is I would just go right into the application. Now, an NLG, obviously, that's going to be an IUL. And I'm going
Mm-hmm.
to run an illustration, share my screen with him, and
Mm-hmm.
explain the cash value aspect of it. Right.
Mm-hmm.
I didn't explain any cash value aspect of it just because I was trying to kind of keep it a little bit simple here,
Mm-hmm.
just because Faye's a little bit new, so I was trying to keep it a little bit simple here so that we can kind of get the gist of how the call normally goes, right? But a couple of points that I wanted to point out. For one, did you guys, and let me kind of open it up to you guys and ask you guys some questions. What did you guys notice about my demeanor the whole time?
You were calm and you spoke really it wasn't
I can't
slow,
hear you,
but
Faye.
you
Are you
can hear.
muted? Oh, your microphone's not working.
Can you hear me now?
Sorry, Kelly.
No?
We were just kind of like
Can't hear you.
slow, consistent, not excited, just asking questions,
Oh, go ahead, Kelly.
getting the information that you need to take him down a certain road.
Yes.
Hmm.
Yes.
Right.
Cool, calm, not excited. I'm not bored, but I'm did you notice the space in
To
between
let them think.
questions?
Mm.
Why do we want to leave space in between questions? What does that help the client understand? To let them think? Yeah. What else? Looks like Faye's having a hard
Pacing,
time on her side.
cadence, pacing, maybe.
Pacing, cadence. Yeah. But let me ask you this, let me kind of give you a different perspective here. If I ask you one question and then they answer it, I ask you another one and then they answer it, I ask you another one, back to back to back to back to back to back. What does that seem like to the client?
You're needy and pushy.
Needy. Yeah. Kind of pushy. Yeah.
Yep.
It also really kind of seems like I don't care. Right? I don't really, I'm just going off of a canned script. I'm just asking the questions because they're questions that I have to ask. Right? But if I'm leaving space in between the questions and kind of, asking a question with a pause in there and thinking about the actual question, then it kind of gives them the idea, the knowledge that I really do care.
Right.
Right? That I'm really, really, truly trying to find the information to help that client. Right? So these questions, they're not canned. I don't have any list of questions sitting on my computer over here saying, okay, now I'm going to ask this question. Right? The whole point is to get the information from the client. Why? Because you truly want to know. Right? Now, let me ask you this. Did he give me any objections?
No, it wasn't like,
I don't remember hearing any objections.
Just a little objection on the why you're asking me the financial questions.
Yeah,
the
but that
rest of this
also
last
didn't
Friday
have to be an
was
objection. It
with
could have been
Hiram.
a legitimate question. Why are you asking me all these questions? Right?
Right.
So
You know what I
just
mean?
decided to,
So
shut up today.
yeah. Now that's okay. That's okay. Well, the thing about it is some people, like, that's why we're kind of teaching this way of selling now, because I think it's a better way to sell. The client truly feels that you really care about them. You're going to be able to put them in a better position. You're going to get more referrals. You're going to get less chargebacks because they know that you truly care and you're not just out there trying to sell them a policy, right? And when you really truly care and you're really trying to dive deep and ask these questions that you really care, you're not going to get any objections. And if you do get any, they're going to be small. And if you don't get objections, you don't need to know any rebuttals. Right? Okay. No problem. Take care, Jeff. Yeah, take care. So the reason why we do this is and if you notice, I answered primarily all, I don't know if you guys can see that, a lot of the questions on the financial inventory. You see? But I didn't ask them in order. I didn't ask them in an interview, right? We're not interviewing the client. We're doing the best we can to help them. And so by going down and asking, that's why we call it a discovery call, because by going through it, we're discovering what they need, right? What their problem is. And then say that again, Faye.
Can you hear me?
Yeah, I can hear you now.
Okay, that was my question. I was gonna ask you, whenever you was asking him all those questions, was that like the deep dive or like the discovery? Okay.
That's why we're kind of deep diving down to find out, where the pain point lies. What's the purpose? and his pain point was what? What was his pain point?
That he didn't want his family to move.
Yeah. Because originally when I asked the question, he said, I want to protect my wife and my kids. That's not a pain point. Who doesn't want to protect their wife and their kids? How does he want to protect his wife and his kids? Why does he want to protect his wife and his kids? Right? But notice he has a life insurance policy. So normally a newer agent might say, oh, well, you already have coverage. Okay. Have a nice day. But I'm going to now figure out why. Okay. You've been looking for life insurance for 6 months. He bought his house 2 years ago. He's getting peppered with mail, with social media about mortgage protection, life insurance as soon as he buys a house. Automatically, people just go on marketing lists. I know how it works. It just happens that way. So why all of a sudden now does he want to buy life insurance when he already has life insurance and he has enough to pay off his mortgage if something were to ever happen to him because he has a $250,000 term policy? So when I ask the question, and think about it, it's not salesy. You don't have to be the salesman. You can just, out of curiosity, what would the next question be? Well, you already have a life insurance policy that pays off the mortgage. Why are we on the call today? What do you want another policy for when you filled out that mortgage protection policy? So then now more information comes out. Also, another thing that I wanted to point out is every time he gave me an answer, what did I do? Let's see if you guys picked it up.
The question.
Say that again.
Answered it with the question, right?
No.
No?
Well, sometimes, if he asks me a question, sometimes I answer it with a question. But when I asked him a question and he gave me the answer, like I asked him, why do you want insurance now? And he said, because my wife, if something happens to her, she would have to move. If she loses my income, because she'd barely be able to afford the house with no mortgage because of the way the mortgage rates are. Right now, obviously, I'm a real estate investor, so I know the mortgage rates, but I'm not even going to dive down that rabbit hole. It doesn't matter. To him, that matters.
Well,
right?
yeah,
So what I'm getting at is what I did. Did you pick it up, Kelly?
I kind of refer to it as an alternative.
When he gave me an answer, what did I do?
So when you're telling me that you want to do this and this and that, what I mean is that if someone gives you an answer to something,
an alternative confirmation. What do you mean?
This is a little bit old school. I don't know. An alternative answer question is it's simply a yes or no. So Sean, you want to make sure the wife and the kids are protected properly. Is that correct? And they can stay in the house. Is that correct? Right.
Yeah. So what are you doing? My point is.
So what I'm hearing from you, Sean,
you're answering my question, but just in a different way.
You're getting them. Right?
What was that, Faye? Oh. What was your answer, Faye?
I said to get them to say yes.
No. Okay. Let me kind of be clear of what I'm talking about here. So whenever I ask him a question, okay, he gives me an answer, right? So why, let me give you an example. Why are we on the call now? You already have insurance to pay off your mortgage if you were to die. So why do you want more life insurance, right? I'm almost essentially talking him out of it, but I'm curious, right? I want to know why. And he said, well, my wife isn't going to be able to pay. If she got a new house, she's barely going to be able to afford it with the way the market rates are. And my kids won't be able to go to college. So then what did I do? I went right back to him and I summarized what he said.
Okay.
That's my key. That's the key point right there, is what you need to do is summarize back to them every time what they say.
Okay.
So your wife won't be able to afford the house payment if she got a new house, and your kids won't be able to go to college. Is that accurate? Yes. Then he's going to say, now, a lot of times what happens is when you summarize back, and you want to summarize back every time, because now they understand that you're listening to them. They understand that you're getting what they're throwing down, right? You're picking up what they're throwing down. And then they sometimes offer more information, right? And that extra information is going to help you. And he said that, yeah, and my kids won't be able to go to college. And that would be hard for them. Okay. And that's hard for them. Why would that be hard for them? Right? No, we can't think. We got to take the common sense out of it, right? We can't think, yeah, that would be hard. Ask them why it's hard. I know it would be hard for them. I know why it would be hard for them, but ask them, okay, tell me more about that. Why would that be hard for them if they don't go to college? To me, that would seem like it's easier not to go to college, because you don't have to pay for college and you can go play video games all your life, right? Don't ever assume, right? And then he asked the question, why are you asking me all these questions? And that's the perfect answer. Well, sir, I don't want to assume. I want to make sure I'm clear on what I can do to help you. And so I want to make sure that I'm asking you the right questions here, and I care. Right. And so when they give you those statements, summarize them back and then let them talk. And a lot of times they give you more information. If they don't, listen to what they said and then ask them a question based off the answer that they gave you. Well, that would be hard if they don't go to college. Why would that be hard? Well, now I'm getting him to think. And now he's telling me, he's literally selling me on why he needs life insurance right now, why he needs mortgage protection right now. And so he said that, well, they wouldn't be able to go to college, and they wouldn't be able to do the things that we wanted them to do. And we put money aside and for them to go to college, and they wouldn't be able to. Okay. So then we boiled it down to, what does he really want the money for? It's not to pay off a mortgage. That's how he came in as a lead. He saw the mortgage protection ad, but really in his mind, he wasn't thinking of it as pay off my mortgage, because he's got a policy to do that. Or maybe he was thinking, I'm going to use the new policy to pay off the mortgage and use the other policy to pay something else, right? But as life insurance agents, we don't have to sell them a mortgage protection policy. We're going to help them with a policy that they need or can use for whatever reason they can use it for. The average person in their lifetime buys 6 to 8 life insurance policies. Why? For different purposes. They can use one policy to pay for a funeral, 15 to 20 grand, or a cremation. They can use another policy to pay off debt, right? Maybe they have 40,000 in credit cards. Maybe they own a car that they want their kid to have, right? maybe they can have another policy to specifically go to pay off the mortgage. Maybe they just want to leave 20 grand per grandkid behind. They have 5 grandkids, so they need a $100,000 policy to leave behind specifically for college. Maybe they want a policy so they can use it to grow their money tax-free in a life insurance policy to supplement a tax-free retirement income. There's plenty of reasons why they need a life insurance policy. It doesn't have to be for the same exact reason that the lead comes in. If they come in for final expense, but they have great health and they qualify for an IUL and they understand what an IUL can do for them in retirement, why not help them with an IUL instead of a final expense whole life policy? Right?
That was next question was, is the reason why you suggested an IUL is because it was going to be like an $800,000 policy?
Yes. And the simplified issue products that we sell have limits.
Okay, that's what I
Right?
thought.
So like Americo, the max you can go up to is 450,000. With Moo, I think the max is 350,000, maybe 400,000. I'm not quite sure on that. I don't sell too many Moo policies. Ethos, they'll go up to $1 million, right? Not going to say anything bad about Ethos on here because this is being recorded, but with NLG or F&G or Columbus Life, those carriers are bigger carriers that hold and do big, huge policies all the time. They're very familiar with it. So it's a lot easier to just go and write a policy through them, right? Now, in that case, if we were on a real call, I would kind of explain to him some of the benefits of an IUL. And then as I explain the benefits, I would take it away because I don't want to I want to completely make sure that, look, man, all of these benefits you can have only if you get approved, but we got to get you approved first. And that's the biggest challenge. Some of these policies are pretty hard to qualify for because, your health, and they may find something in your health that you don't even remember you had. And they're the ones flipping the bill if you die after the day you make that first payment. So they need to check you out, not you check them out. You just need to agree with the contribution levels and go from there. So that is, in a nutshell, how we do pretty much every appointment. Okay. Now leads will come in different manners, right? Like you can get Ethos abandoned cart leads and they're life insurance leads, just people looking for life insurance. You can get final expense leads and there are people looking for final expense to pay for a burial or a cremation. You can get mortgage protection leads that are people that are looking to protect themselves with the mortgage protection, which are one of my favorite types of leads because they both have an income. They're both working. And a lot of times you could sell 2 policies. And in that case, I sell them an IUL almost every single time. If they qualify for a term policy, they're going to qualify for an IUL because it's the same underwriting guidelines. And so in that scenario, I explained to them that, look, I know you were possibly thinking about a term policy, but a term ends in 20 to 30 years. What do you think about a policy that would grow cash value, that would cover you for the rest of your life? You never have to get a policy again. And you can borrow from that cash value anytime you need some extra money, or if you want to make an investment and then pay it back whenever you want to. Would that interest you? Well, yeah. Kind of a term policy on steroids, right? It really is.
Mm-hmm.
So we only got a few minutes left here. Actually, it's right on the top of the hour right now. Do you have any last minute questions, concerns that you guys wanted to ask first?
So whenever you're on the phone call with them, when does is it at the very top of whenever you get on the phone and you introduce yourself and everything? Or is it during the financial inventory?
Is what?
The deep dive discovery.
So you notice how I just did it just now, right?
Yeah.
Yeah. So I just called up Jeff and I said, "Hey, Jeff, this is Sean. Got you on the schedule here to go over a mortgage protection policy options for you. Just want to confirm your birth date is blah, 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 blah. What's your height and weight?" And he told me, and then I just started going right down the financial inventory. You can see right here. I don't know if you can see that.
Yeah.
His name is right here. There's his birthday, and then this question right here says, "What got you interested in the IUL?" Well, this is excuse me.
Mm-hmm.
This doesn't have to be for an IUL. It could be for anything.
Yeah.
But that's the question that kind of opens it up, right?
Okay.
You want to ask an opening question. It's called an opening question because it's going to open it up for the client to just start spilling their guts, right? What got you interested in a mortgage protection policy? Why are you looking? What I asked him, here's my specific question. How long have you been looking for mortgage protection policy?
Yeah.
6 months. Okay. And then I wanted to find out, has he talked to any other agents? Why didn't he pull the trigger on a mortgage protection policy if he spoke to some other agents? What's the purposes behind all of that? Why is he looking for a mortgage protection policy? And he mentioned he's got some other insurance. Well, I left that in my back pocket. And then later on, I asked him, you mentioned you have insurance. How much do you have? Right? So I'm finding out all of the questions on here just in different ways.
Yeah. Okay.
Does that make sense?
Yes.
Now, we on role play, we dive much, much deeper than normal. Okay. In a real life call, practice diving deep, but you're not necessarily going to have to dive as deep as we do on the role play call. You want to try to, but you may have the information that you need in like 5 questions.
Okay.
You don't have to ask 20 questions. You may have the information that you need in like 3 questions. And that client may tell you, yes, right now I need life insurance right now. Okay, boom. So if we were to submit a request to the carrier right now, when do you want to start the policy? Like yesterday. Okay. You don't need 20 questions, right? You just go through the health questions, go through the finance questions, find out what they qualify for, put them in a policy, right? So that's kind of the gist of it.
Sean, I got to comment on that, please.
We're selling now on an advanced way. Normally we did it by the script, and these are the questions that you ask.
You've been going more of a natural approach versus a script verbatim.
Yeah.
Because that script verbatim does not work with everybody. Right?
Uh-huh.
And yeah. And some people say, well, just say the same thing over and over and over again.
It doesn't. And that's why we're doing it this way. Everybody is different.
And for number 2, everybody's different.